Hi, I'm Kelsey Davidson with BDA Financial, and today I want to talk to you about a brand new law that just passed, and it's a big one. It's called the Big Beautiful Bill. Yes, that's really what we're calling it in Washington, and it's nearly 900 pages long. But don't worry, I'm going to walk you through what really matters in just a few minutes. This law changes a lot about taxes, deductions, and how the government money is being spent. Let's start with a quick refresher. Back in 2017, President Trump signed the Tax Cuts and Jobs Act, which lowered taxes for individuals and businesses. But those tax cuts were scheduled to end in 2025. Now this new law makes those tax cuts permanent. That means the current tax brackets, 12% to 37%, stay the same. The old top tax rate of 39.6% is gone. And for most people, your take-home pay may go up just a little. But the real headline is this: a $4.5 trillion tax cut. That's trillion with a T. Let's talk about what that means for both businesses and everyday people. For businesses, this bill is very business-friendly. Companies can now write off 100% of what they spent on new equipment and research right away. That's a big deal. It encourages more investment, which could help grow the economy. For individuals and family, there's some good news and some not so good news. The child tax credit increases from $2,000 to $2,200. The standard deduction goes up in 2025 to $15,750 for single filers and $31,500 for married couples filing jointly. There's a new $6,000 deduction available for adults age 65 and older, but it phases out for higher income households. And if you finance an American-made car, you can deduct up to $10,000 in interest. But the $7,500 tax credit for electric vehicles is ending on September 30th. That's a big loss for EV buyers. And to help pay for tax cuts, the bill reduces fundings for programs like Medicaid and SNAP, which is food stamps. So while wealthier families may get a bigger tax break, about $12,000 on average, lower income families could end up paying about $1,600 more per year through a mix of taxes and benefit reductions. If your family relies on Medicaid or food assistance, this bill brings new work rules. You'll need to work at least 80 hours per month to stay eligible. Make sure to check how your state is handling this. Now let's talk about Social Security. Like we said, there's a new tax deduction for retirees starting in 2025. $6,000 for single filers and $12,000 for married couples filing jointly. But there are income limits. And the deduction starts to phase out once your income hits $75,000 for singles, and it's gone completely at $150,000. For couples, it starts phasing out at $150,000 and gone at $250,000. Here's the key thing. This deduction does not reduce your income for Medicare surcharges, so it won't lower your premium if you're subject to IRMA charges. Still, if you're under the income limit, this could lower how much your Social Security gets taxed, but it is only around until 2028, unless Congress extends it. There's also something brand new, the $1,000 Trump accounts. If you have a baby born between 2025 and 2028, they will automatically receive $1,000 in a special account from the government. As a parent, you can contribute up to $5,000 per year into the account until they turn 18. The money can grow over time and be used for things like college, starting a business, or buying a home. If the money isn't used by the time your child turns 31, the account will automatically cash out. And if it's used for something not allowed, you'll owe taxes and a 10% penalty. So what should you do now? 1. Review your budget. See how the new deductions and credits might apply to you. 2. If you're thinking of buying an electric car, don't wait. September 30th is the deadline for the tax credit. 3. If you're retired or getting close, talk to a financial advisor. These Social Security changes could affect your tax planning. This law is huge, but you don't have to figure it out alone. Here at BDA Financial, we're always happy to help you make smart, confident decisions with your money. If you have questions about how these changes affect you, give us a call or schedule a time to chat. Thanks for watching and take care.